Okay, all right, we'll go ahead and get started. Let me pull up the chat window so I can see that, and then make sure we're all good. Let me do a quick audio visual check with you guys, if you don't mind there. Those that are attending, just make sure you can hear me and see my screen okay. I'd very much appreciate that. If everybody can hear me, type a 1 or a 2 or a 3 or a 777. If you can hear me and see my screen, I'd appreciate it. All right, perfect. Thank you. Okay. All right, gang, let's go ahead and get started here. My name is Silas Peters from Trades Trending. I want to thank David and Aka and the Timing Research team for having me on. Very much appreciate it. This is always a great event. I know you guys are absorbing a lot of education this week, and it's a really important time to be doing so. If you look at the markets, you know, where we're at, currently the volatility that is picking up, and it's really good timing too for me to be here today, because I'm going to show you how we were actually able to kind of time this. I'm not going to be one of those that, yes, we timed this to the top tick and to the bottom tick, but we actually kind of did. So I'm going to show you the proof of that, and it's really cool. So love this workshop. It's called My Top 3 Secrets to Be on the Right Side of the Market. I can guarantee you probably not seen anything like this before. We're going to have a good time. It'll be interactive, and I can't wait to show you something that we've been working on for quite some time. And we are in some exciting times, some really incredible opportunities, not just now, you know, in our face, but also on the horizon. And before we start, let's cover the risk disclaimer. We know trading is risky. There's absolutely no guarantee past performance is indicative of future results. You must always consult your tax or financial advisor before applying real risk capital in the markets, i.e. you can lose money in trading. And so now that you understand the risk, let's talk about what we're going to cover today. We're going to talk about how to use a trading compass to know exactly what to trade and when, how to define worst case scenarios in any trade, long, short, or out, how we use AI to get the trend, and what our good friend Kenny Rogers said a long time ago: know when to hold them and know when to fold them. Plus, my big promises to you is that you're going to learn to get your time back. You will discover a much simpler way to trade. You'll discover a totally different way to trade, a much easier, simpler way. In fact, my number one goal for you is, by the time that we leave or depart here today, is that you will have an easy 3-step trading framework you can use every day. And my job is to make you an informed trader and investor. And I want you to be skeptical. And to give you a quick taste of what we'll be exploring together, I'm going to show you a handful of case studies, because seeing is believing. This is a chart of BRP Group. I have no idea. In fact, you did not know what this stock was either, or where the market was heading. Probably said, well, probably higher. I mean, we look at the trend, the market's heading higher, but our predictive forecast model was suggesting a bearish move ahead, or a near-term top. And that is precisely what happened. BRP made an interim top and went south to the tune of 16.5%. Another one, boring ETF XLP, consumer discretionary, predicting a bottom. The market is getting hammered. We're in a downtrend, but our software is predicting a bullish forecast ahead. And how could we come in here and safely catch this knife and ride the trade 15% higher, all by using our software and our modeling system that I'm going to be sharing with you? Here we look at JP Morgan. We were in the midst of bank earnings season. The market was rising here. However, our model is suggesting a bearish forecast looming ahead. What happens? The market makes a U-turn and trades nearly 30% to the downside. Let's take a look at TLT. Poor bond market was absolutely getting pummeled, but if you knew our highly predictive AI technology says not so fast, we're likely going higher and doing so on a specific date, this is where we come in and take a bullish position Well, everybody here who just took the momentum trade and sold the lows are now getting what we call a face pill. Now, you guys are here more likely because you're looking to supplement your income. What if you could place a trade in TLT and generate an extra $4,500? How would that make an impact in your life? Type it in the chat box. What would you do with an extra $4,500 this month? I want to know your why behind being here, why you trade, whether it's early retirement, taking vacations. Maybe you're in a situation where you have to take care of a family member or loved one. I mean, we all have our various whys of why we participate in the markets. What would knowing the precise time to build a long position here in Netflix do for you right there? What about placing a trade such as buying 100 shares, buying a batch of call options that generated over $14,000 and took you less than 5 minutes to identify the trade, frame the market, find your entry, and then let that market rip? What about this trade in crude oil? This market is ugly. It's horrendous. I have no idea of direction. It's moving sideways, but our predictive forecast model says that we are at a significant turning point. And if you follow its lead and took a long, you have the opportunity to turn one contract into $24,000 with little drawdown. What would you do with an extra $24,000? How would that impact your life? You think if you were a trader that generated these kinds of results, your life might be a little easier? I'm going to tell you why I trade. I trade for one reason and one reason only, and that is freedom. I trade because our software enables me to locate and execute results like this. We just had a $22,000 downturn in crude oil, and that's coming off the $24,000 per contract trade to the upside. Who cares if a market is going up or down? We trade the up moves, and then we happily trade the down moves over and over again. But I trade because it's the best vehicle that affords me the ability to be a better husband. When I can generate results like this, it allows me to be a better father, because with that freedom, I can be present. And so the question is this training for you? If you're sick and tired of spending countless hours researching what stock or ticker symbol to trade, this training could be for you. If you're frustrated, feeling like you're deciding direction based off a coin toss, this training is for you. If you're done with being a day late and a dollar short in the markets, then this training could be for you. And my goal is this. I see your whys in the chat, and know what I'm going to share with you today truly has the ability to make a huge impact in your life. So I want to make this training worth at least $3,000 for you. My only ask is that you treat it like you paid $3,000 to learn what I'm about to share with you. And if you stay until the end, not only will I share with you my top picks right now, but I'll share with you how you can get exclusive access to my personal and proprietary trend software that allows me to generate the results I share with you already, as well as throughout the presentation. And so type your phone number in the chat if that's something you'd like to be interested in, to have the tools, the skills, the knowledge to being on the right side of the market. So who am I? Who's this guy that's been going for the last 10 minutes? For those of you who don't know, my name is Silas Peters. I'm a veteran trader who cut my teeth at the Chicago Board of Trade. I've traded some of the biggest markets for hedge funds, banks, commodity trade advisors, but more importantly than being a trader, I'm a husband to my college sweetheart. I'm a proud girl dad to 2 beautiful daughters, and trading affords me a blessed life where I get to live at the beach, travel, and most importantly, be present. I've had the honor of teaching thousands of traders just like yourself who've gone on to achieve some great success stories in the markets. We've got stories like Bruce, who made some money on the stock I recommended, Merle, who made money on DVA. You've got Mark and Andrew and John, and all these success stories that continue to come in. Another student who said he made money using technique on T triple Qs. Andy, who made back his money in less than a week. Philip, Lee, James, on and on and on. How Ernest is now able to fish. This is the ultimate compliment. He's taken action with what I taught him and is now fishing. David, who said that one trade has more than paid for his membership, and then Stan, who made 100% in an option in less than 2 weeks, 2 trading days. But look, my results are not typical. This is not some get-rich-quick scheme, not just effortless earnings. My results are not typical because I put in the work and I've taken action. And you can too if you listen closely. If you listen closely, this is what you'll discover. That you'll leave this workshop with an easy 3-step trading framework that you can use every day that will save you hours and hours from being glued to your charts. In fact, during this workshop, I'm going to show you exactly how to find a trade, get direction, find the entry, get risk and reward in place for a highly profitable opportunity, all in the market in under 5 minutes. But before I do that, let me ask you a question. How many of you felt like this before? You started your day off feeling great. You slept well. You made your hot cup of coffee. You woke up with the love of your life who's made a great breakfast. She already has on your morning financial show running in the background and has laid out your fresh edition of the Wall Street Journal. Just ready for you to find your next golden nugget that's going to make you massive profits in the market. After breakfast, you move to your home office. You sit down at your incredible workstation with your triple mantra setup, all your different charts. And before you know it, you've got over 100 tabs open and you're staring at over 100 symbols. Uh-oh. This is not good. Why? Because now you're left mind blown. You're frustrated. Why? Because you're now overwhelmed. You're flying blind in the market. What is one of the reasons? Why is this happening to you over and over again? Well, let's do the math. It's because of the sheer number of markets to analyze. Did you know that at the end of last year, there were over 7,700 stocks listed on the New York Stock Exchange, 4,400 stocks listed on the NASDAQ, 2,000 stocks listed on the Shanghai Stock Exchange? Doesn't even scratch the surface of the tradable names listed on the OTC pink sheets, the Canadian, German, London exchanges. Doesn't include the 100+ commodity futures markets, 100+ currency markets, other liquid and illiquid, REITs, MLPs, prefers, fixed income, crypto spreads, and others. In fact, you're now looking at over 245,000 tradable symbols. No wonder 97% of everyday traders and investors start off behind the 8 ball. No wonder you're sitting there every day staring at the charts with glazed eyes. No wonder at the end of the day, the week, and the month, you likely have little to show for your time and effort. Well, what if there was an easy button? What if you're able to filter 245,000 symbols down to 5 with one click of a button? Not just a random 5, but 5 of the top markets set to make a move. And that's the first line of business and that we're going to be covering today, to know exactly what we will be trading. And did you know if you spent 30 seconds researching each ticker of the New York Stock Exchange, the NASDAQ, the Merck, the London Stock Exchange, it would take you almost 4 days, 19 hours, and 56 minutes. That's right. I asked my programmers to do some research and let me know how long it would take to manually scan the New York Stock Exchange that fits our criteria. I was shocked when they came back with a crazy high estimate of 4 days and 19 hours. Here's why. As I said before, there's over 7,750 stocks on the New York Stock Exchange alone. Tossing the Dow, the NASDAQ, others, it's pretty much impossible to have the best stock list without using technology. So what if we leaned on the power of the machines to take that 4 days and 19 hours and whittle it down to a few clicks of the mouse? And that is exactly what we did using the power of technology. I had a program built that eliminates me, takes me out of the equation, remove the human error side of things, spits out top ranked trade ideas based on AI data. It has totally changed my life, and I think it can change yours. Only 8 seconds every day to know the stock and the ticker that gives me the best chance to generate profits in the market, where you get the symbol, you get the direction, and you get the strength number ranked in order from best to worst. Now, not just for stocks, because I personally love to trade futures and commodities like grains, gold, crude. I had it built for those markets as well. Same process where you get the symbol, the direction, is it a buy or a sell, and the strength ranked in order. Even works on Forex. You get the ticker, direction, and the order of best to worst ranked with a strength ID to help you see which has the potential for the strongest moves. And by using the power of our predictive AI forecast model, we can easily, with a glance, spot the highest opportunities for markets that are about to move. We know where we should be buying, where we should be selling, where we should be buying, where we should be selling, where we should be buying, and where we should be selling. Now, I'm going to do a quick poll here. Very easy question. I told you this to be interactive. Who here has a checklist that they abide by before entering a trade, or a checklist that they may use to qualify a trade? It's either a yes or no question. It's very simple. Type in a yes, type in a no. Successful traders, businessmen, leaders all use checklists. Why? Good checklists are precise, they are efficient, and they're to the point. And they're easy to use even in the most difficult situations. So you're either using a checklist or you're not. And let me tell you why you should have one. Because checklists do not try and spell out everything, but they provide reminders of only the most critical and important steps. The ones that even the most highly skilled professional using them might miss. Good checklists are above all practical. So where am I going with this? Well, as I said earlier, successful traders use checklists, and here's mine. Your 5 steps to the trade look like this, and you might want to write it down, take a screenshot. We are going to find our top markets. We're going to determine directional bias. We're going to frame that market using higher time frame analysis. What is it doing? Where has it been? Where is it likely headed? We're going to use it to time our entry, and then we're going to come in and manage the trade. And that's it. That's my simple 5-step checklist that is rinse and repeat on a daily basis. And since we've discovered how to find our top 5, step 2 is direction. If we do not know direction, we are pretty much blind. We have no business even being in the market. We have to know directional bias, because with the directional bias, it means we're like a pilot. Imagine being a pilot. You're circling the airport in Aruba. You're waiting for bad weather to break so you can land. Your instruments are saying you should be able to touch down in roughly 12 minutes. The weather is very, very bad below you, like borderline tropical storm conditions. And your gut says leave. Turn that plane around and just leave. But as a pilot, you don't fly around weather based on your gut or your instinct. You've done this thousands of times in your simulation exercises. It's basically in your blood, engraved in your DNA. You don't panic. You use the instruments. And trading is the same way. You have to have the best instruments to keep you from making mistakes. If you're jumping in the markets without the proper tools, the instruments, the compass, you're likely destined to fail. Successful traders use highly accurate, simple instruments that you can trust to help make the right decisions at the right time, regardless of the storms you may encounter. And my new trading tool is all of these things. It is my instrument cluster. It tells me what to look at, what direction, and the timing of that entry. It's highly accurate, very easy to use, and it is my primary tool that pulls all the data. The same data I used to spend pulling every day. And you know what? It gave me back my time. It gave me back my time. And not only that, it improved my trading. And that leads us to the $64,000 question. This is the age-old question, right? This answer right here is what makes markets. We've got bulls, bears, fear, greed all kick in. Would knowing what direction you should be trading a financial instrument help you? Would it give you an immediate leg up on where you are now? The answer is a resounding yes. And if the answer is no, it should be a no trade for you. You shouldn't be trading if you aren't making direction a priority before you put your hard-earned money on the line. Without a solid strategy, you might as well flip a coin, shake a magic 8-ball, go ask a tarot card reader. And no offense to any tarot card palm readers here today. I'm sure you're very good at your craft. But what if there was an easy button? Those were ridiculous examples. We know we're not going to do any of that. In fact, I forbid you to do any of that because trading is a business and we have to take it very seriously. And as you're going to learn here momentarily, you can have a crystal clear trading plan that you can take to the markets in utmost confidence every single trading day. That is the exact difference between successful traders that you may or may not follow and part-time retail traders who seem to always end up on the wrong side time and time again. Successful traders have an easy button for nailing market direction, and they lean on the power of technology for having the heavy lifting done for them, so they don't have to rely on a coin toss to figure out direction. They already know within seconds, is it long? Do we have a short bias? It's that simple and easy. The problem most retail traders fall into is overcomplicating the process. Am I right? We're all guilty of overcomplicating the process because we're human. And it leads you into a trap. So I want to talk about what a trap looks like and how technology can protect you. I want to go through the process of how historical data can help us make sure we have direction right. In this exercise, I'm going to show you how to remove human error from this critical step in the trade by removing you from the decision-making process. This is a daily chart of Intercontinental Exchange, ICE. If you look at the past month or two, you can see that it's gotten beaten down. It's gotten pummeled. Very bearish, lower highs, lower lows. You're thinking probably going lower, right? Well, what if you knew that this time period is the most bullish period of the year for ICE in a 12-month period? Not only that, but historically, it's also realized an average increase of approximately 8.9% over the next 60 days. And not only that, you also know that ICE has been positive 94% of the time with an average gain of 6% over the last 17 years. Think about that, 17 years of data. So, stock's in full bear mode. Your gut's saying jump into the short side because you believe it will go lower. We can't resist our FOMO temptations. So do you short it? Do you buy it? Or would you sit out? Type A in the chat box, type a B for buy, an S for sell, or an O for out. All the historical facts I just gave you, ICE gains 94% of the time over the last 17 years, average gain of 6%. Some of you would still be considering a short. I would not. I would be a buyer, and here's my process. Based on the data I have in front of me, I will immediately eliminate sell because the facts are the facts. And as a trader who has relied on historical data to make market predictions that have paid me and my members year after year after year, I have to go with what history says. It says I can be long or I can be out, but getting short is not an option on the trade. Let's look at what should happen. This is a chart from my Software Trend Insider. It shows me the history with one click. Why would you be shorting right here? The market's telling us we should be setting up for a beautiful long entry, a cycle bottom with low risk, high reward, because what the data is telling us, the data I just shared with you. And these are the types of trades that I look for every day, type of trades we all look for, because what I just shared with you gives you an edge. The data, the chart totally removes my emotions, my bias, my gut, Because the law of averages are clearly pointing to the upside. Here's a chart of Hormel Foods. You look at the last 3, 4, 5 months, you see that it's risen sharply. Very bullish, nice gains. You're probably thinking going higher, right? You're going to buy the momentum breakout trade. Well, what if you knew this time period is the most bearish period of the year for Hormel in a 12-month period? Not only that, but historically, it's also realized an average decline of 6.7% over the next 60 days. And not only that, you also know that Hormel has been negative 81% of the time with an average loss of 7.3% over 42 years. 42 years. And here's your visual representation showing 10, 20, and 35-year average price cycles. Why you would have been shorting here or damn sure not buying or getting long. You see how being armed with this data gives you an edge? At this cycle peak, Hormel then dropped 24%. History has memories. It can and does repeat. So you see how we're methodically heading down our checklist. Nothing complicated about this. Up to this point, you see how using a checklist can potentially make you a profitable trader. We have found our top market. We've determined directional bias. Now we need to frame the market and time our entry. Timing entry is critical for any trader if you want favorable risk to reward. So let's talk about how you can do it. As I said earlier, proper timing is key to ensure your trade has favorable risk to reward scenario, but let's break it down a little bit further. We need to start by framing the market. I'm not talking about picture frames. I'm talking about framing the market by looking at the market through a bigger picture lens. What does that mean? It means we start with the higher time frames because the higher time frames govern the lower time frames. They hold more weight. So write that down. You start with the higher time frames. So let's take a look at this chart of Lululemon, monthly chart of Lulu. We begin by framing the market. We do this by marking out higher time frame supply and demand zones, support and resistance from the history of the chart. Where has price turned? Where has it changed trend? We then go to a weekly chart. We want to find our zones on the weekly that fall inside of the monthly. And then we go a step further, and you guessed it, we look for those daily zones that fall into weekly, monthly. By buying at demand, we're buying at demand and selling at supply. We're geared up for trades that ensure favorable risk to reward. How? Because we're always buying at discount and selling at premium. Think about it this way. When you go buy new shoes or Lululemon, for example, you want to buy at cheap prices. You want to buy at discount prices. Well, what about when selling your car or a baseball card? You want to sell high, command a high price, which is known as a premium. Treat your buying and selling in the markets the same way. Buy stocks on discount, liquidate or sell short at high prices or premium prices. Treat your buying and selling in the markets the exact same way. You've heard of buy low, sell high. Well, that's the concept. Let me put it into a non-market perspective. Take a look at this Sam's Club bottle of water. The cost, 75 cents. Take a look at this bottle of water made by Voss. The cost, $7.49, a 90% premium to the Sam's Club bottle. Sam's Club is at a discount when Voss is at a premium. And so putting this back into a trading or market perspective, just like when buying water or selling water, we want to do the same in the market. The simple principles of supply and demand. And so let's recap. When we frame the market, we are identifying our battlefield, our playground. We know with a glance that we're always buying at discount, we're selling at premium. Demand equals support, means a bullish position. Supply or resistance equals a bearish stance. So take a screenshot of this slide if you wish, because it's a very important concept. And that brings us back to our checklist. Who here is finding this helpful so far? Simple 5-step framework to making educated and informed decisions where we're locating our top markets, determining direction, framing the market to time our entry, and then we're managing our trade. Before we approach any trade, before we get too excited about the actual entry, we must ask ourselves, what is our risk on the trade? What happens if we're wrong? Because as you know, there are times we will be wrong. In fact, you should always approach any trade as if you're going to be wrong. Here's how I do it. Write this down. When I look at risk, I don't look at it as a dollar amount. I look at it as a percentage of my account. And every time I'm prepping for a trade and trying to figure out how much money I could make, I look at it as a percent, and it better be higher than my risk. You need to ask yourself this before every new position. Can you afford the trade? And so let me show you an example of what I mean. Let's take a $10,000 hypothetical account example. Let's say my balance is 10 grand. My risk per trade is 5% or 500 bucks. Let's say I'm going to buy 100 shares. And let's say I plan to use a $3 stop. If I'm risking $3 or 300 bucks on this example, well, $300 last time I checked by Alabama math is less than $500. That means that we can afford the trade. Bottom line is this: if you can't afford the trade is too risky. Move on. There are plenty of other opportunities out there. So it's absolutely essential that you know your number. What is your risk number? Let's talk about what bad risk reward looks like. What would you consider a good win rate? Would it be 90%, 30%, 50%, 75, 80%? Anything better than what you're doing right now, as long as you're making profit? Well, let's take 80%. Sounds great on paper, right? 80%. People would kill for an 80% win rate. Sounds amazing. But look at the true numbers. Let's look at the true numbers here. You made money 8 times out of 10, but you lost on trades 5 and 7. Those 2 losing days actually took you net negative. You made $100 here, 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 here. But these 2 losing days, you lost 5 times the amount of money you're making on the other days. That's a recipe for disaster, and the stats prove it. Let's look at another one. What about a 30% win rate? Terrible. Lousy system. If I said, hey guys, hey, come join me, I got a 30% win rate system, you guys would not walk, you would run away from me. You had losses on trades 1, 2, 4, 5, 6, 7, and 9. But you actually had gains on trades 3, 8, and 10. And guess what? You actually made money. You actually made money because of your risk to reward. Let's look at one more. Right here in the middle of the pack, mid expectation 60%, not 30, not 80, 60%. You lost on trades 2, 4, 5, and 7. And you won on trades 1, 3, 6, 8, 9, and 10. Win rate was 60%, but you came out with a net gain of 8% because you had favorable risk to reward. And guys, I will tell you right now, a 60% win rate with a 2-to-1 risk to reward is very achievable and attainable in this game. Now let's look at a real market case study. Let's say that we were analyzing this market, XYZ, ABC, whatever it is, and that we were looking to buy right in this area. We're looking to buy because that's what the data is telling us, that the market has gone higher, forged a low here, and has gone higher. So let's say we frame the market, we determine a high probability, low risk entry point. But does the trade meet our risk to reward criteria? If we are entering here, let's say the price of this stock is $100. And let's say my risk is 5% or $5. Okay. If my software is telling me that the average performance is 10% and I'm risking 5%, well, that's a 2-to-1 reward versus risk. All things else considered, I trust the process. I take the trade in confidence. Now, up to this point, we've covered a lot. And I suspect the reason you're here and the reason you're listening to me today is because maybe you're sick and tired of being at the right place but the wrong time. Or maybe even worse, you ended up at the wrong place and the wrong time. Not a good situation. Now, do you see how we can benefit from a trading compass? Could you benefit from knowing what market to trade, what direction to trade in, and how you could time your entry and manage your risk? You see how you could benefit from the power of using a checklist? How you can benefit from using the power of technology? Are you starting to see why we should all be reaching out and smashing the easy button? If you knew the days of the week, the days of the month, the exact time of the year where the market is likely an extreme high probability of a significant turning point, the average performance of that market, average risk or drawdown that could occur, it's physically impossible to do this by hand. And why would you want to? When you can take the equivalent of an 8-second bull ride and find the highest probability turning points in any market. You have to trust the data because the data does not lie. History does not lie. It's like in this forecast here, turning points where we should clearly be buying and selling. We trust the data like in this forecast. We know that we could be buying the stock here, not shorting. We should not be buying here, not be buying here. You've got years and years of fundamental data telling you in full color display the most significant tops and bottoms across hundreds of markets. Continue to stack the odds on your side over and over again by having the knowledge most traders dream of, not only knowing the trade day of week, but also the trade day of month. Also knowing the best months to be positioned, their performance expectations. You can't make this stuff up. Volatility, how volatile a market is or can be. This is awesome, an awesome tool for option traders. Low volatility, we buy options. High volatility, we sell options. Giving you all the data you need to make data-driven decisions at your fingertips with literally the click of a mouse button. So I want to recap. Let's recap what we've learned so far. So far, we've learned what to trade. We've determined direction. We've learned how to time our entry. We've learned how to manage our trade. Now let's put it all together. Let's put it back together to demonstrate how we could do all of this in 5 minutes or less. What if your typical trade day was more like this? You pour your cup of joe, you enjoy breakfast with your family because you've just banked $4,500 on a long TLT trade. Now you can continue to wash dishes by hand, wash your clothes by hand, manually scour through thousands of tickers, search hundreds of websites for the so-called latest hot stock tip. But why would you? Why would you when you can hit the easy button? In fact, speaking of easy buttons, would it be okay if we go into the software itself? I'm going to pull up the software and I'm going to actually show you how little time this process takes. Can everybody see the screen? I just want to make sure before I do the demo here, can everybody see the screen or see my platform here? This is a glimpse of Trend Insider. Type a 5 or a yes if you can see Trend Insider. Okay, so now what we're going to do is I'm going to pull up the timer widget. Let's pull up the timer widget. Where is it? There we go. So I'm going to put a 5-minute timer on this puppy. All right, so 3, 2, 1, and then we're going to hit start. All right, so this is our inside of our Trend Insider hub. I'm going to come over here. We've got 2 scanners. We've got an algo scanner and a best trend seasonal scanner. So I'm going to go to Algo Rank. And what this is going to do is load up our Algo Rank scanner. And you can see, just like that, we get our top 5 AI-based picks, okay, in order. And so let's just grab this second one, Abbott Laboratories ABT. We can see the direction. We can see the strength. We can also sort by long or short, different market caps, commodities, so on and so forth. Let's drop down, and we see that Abbott Laboratories investing in July, average performance over the last 10 years, 5.2%. Percent success, 100% favorable over the last 10 years. That's some pretty good data. That's some pretty good data. Now, we've got to frame the market, okay? So let's pull up a chart. This is all inside of the Trend Insider Hub. And I think I'm being infected by CrowdStrike because my internet's been slow. So remember, we go to the higher time frame. Let's go to a weekly chart. And this is where we frame the market, okay? We take a simple rectangle tool and we can draw out our supply and demand zones. We're interested in the demand zones because the scanner is telling us that we need to be looking long, right? So with the market framed out on the higher time frame, we can then go back to the daily and we wait for confirmation buy signals, which I've got a very mechanical two-step entry swing strategy for our members. And you can see that it's reacted nicely off of this area. So this is good and this is great, but let's check the seasonality of ABT. We can see that over the last 10 and 20 and 40 years, what Abbott Laboratories has done. I don't think it gets very complicated here. If I look to the right, that is a series of averages that go higher or move up. Everybody see that. We can see our percent of positive months, monthly average performance, and average volatility. So if everything looks great and everything looks good, we can take the trade in confidence and we can drill down even deeper to see trade days of week, to time our entries, as well as trade days of month. If I'm looking to go long a market, I'm buying on days of weakness. Days of weakness. If I was looking to sell a market, I am looking to sell on days of strength. Okay? Let's see where we are at on our timer. Let's see where we're at. And boom, we still have got 2 minutes left. Pretty cool, right? And there you have it. There you have it, the 5 steps to the trade. How this is all done in less than 5 minutes. By leaning on the power of technology. And so I'm going to ask you another question. Do you see how using a checklist can help you find better trades in less time to potentially make you a more profitable trader? That's a yes or no question. Your 5 steps to the trade look like this. We're going to find our top 5, determine direction, frame the market, time our entry, and then we're going to come in, enter the trade, and manage. Now, here's how you can find more trades like this. I want to share with you how to find trades like this every single day. That is why I am extremely pleased to introduce Trend Insider. I have just demonstrated in real time how anyone with a computer and internet connection can locate winning trades in less than 5 minutes. And I want you to be able to do this starting now. I'm going to give you access to my new Trend Insider Market Scanner dashboard. That gives you access to the Algo Rank Screener, Best Trend Analyzer, Predictive Forecast Modeling Suite, and Interactive Charting. Everything that gives you the easy button inside the market. The total value is $19.97. I want you to imagine when you log into your Trend Insider Hub and locate trade opportunities such as this. Walmart. Things are not looking rosy, but Trend Insider is predicting a bullish turning point right there. And Walmart rallies and rips 17% to the upside. Walmart again. Everybody late to the party, jumping on board. Kramer's saying buy, buy, buy. But we're not, because Trend Insider is forecasting a major top looming at this time. And guess what? Walmart makes a top and tanks nearly 24% in a matter of days. You literally just rode this trade to the upside, cashed out, and then immediately were able to take advantage of the move to the downside. While all of the people that were buying at premium prices were left holding the bag. Emerging markets. This point, EEM down 30% for the year. Your trading colleagues would say you're insane to be buying this market, but we can confidently come in and consider bullish positions because we trust the scanner, the data, the entire process, and EEM rallies 23.5%. As part of this package, I'm also going to share with you a day trading strategy and my swing trading strategy. You will not find these strategies anywhere else. I've never shared them. They're exclusive to Trade Insider members. That brings the total value to $3,900. The Trade Insider plus my 2-day and swing trading strategies alone will help you find and capitalize on trades like this in FedEx. Find and capitalize on trades like this in Vornado Realty Trust. Find and capitalize on trades like this in Dollar General. Who would have known or would have been even thinking about shorting Dollar General right here? You would have, because you're trusting the data and the scanner and the entire process. Not only are you getting the Trend Insider dashboard and scanner, my day and swing trading strategies, you're also going to get my top 5 weekly alert picks, my 7-day playbook, my trend entry checklist, and access to live market analysis and our private Telegram room. By utilizing the Trend Insider, the top 5 checklist, 8 weeks of live market analysis, my playbook, plus all the other resources I'm including, you can now swing trade in confidence. You could have in confidence begin to accurately and methodically position your trading, your retirement accounts, the family money you might be responsible for managing by knowing these key turning points in the largest market, the S&P 500. Here's a quick 20-year analysis on the S&P that basically gives you the roadmap for the entire year before it even begins. Why a 20-year analysis on the S&P? Because it's one of the largest and most liquid markets in the world and is a benchmark for the global marketplace. 20 years is a darn good data set because it encompasses a lot of history, a lot of events that have occurred during this time frame. 2008 financial crisis, government shutdowns, pandemics, wars, elections, whatever. This is an average of all of those years. And as you can clearly see, forecasting major tops and bottoms on this chart, major turning points. We don't care what the experts on TV are saying. Think about what is thrown at us every day. Inflation, attacks, riots, you name it. Let's look at what happened at these points in the market as they played out. Imagine being able to take back your retirement accounts, IRA, 401ks, having the data tell you when you should be essentially moving to cash or double dipping and maybe going short. You're shaving years of lost opportunity from the negative impact bear markets can do to long-only accounts. And I've shown multiple examples of how any swing trader can play these moves. Here we are, playing out in real time, just as it has done over the last 20 years. Can you use this to day trade? Yeah. Day traders use Trend Insider to know how to be positioned on exact days of the week, days of the month. Which days have the highest odds of trading higher or lower? And if you knew where those significant tops and bottoms were in any market on a specific day, don't you think you can use that data for your daily directional bias? Absolutely. By knowing the trade day of week, the day of month, performance expectancy, guys, this is real data that you use in real markets. What if you traded a single contract of the E-mini S&P at these cycle tops and bottoms? We have 5 turning points, 5 tremendous opportunities. All you did was take these 5 trades here on one single market. This opportunity is over $78,000. The data and charts speak for themselves. If all this did, what I just showed you, was prevent you from jumping into the market at the wrong time by placing losing trades and actually taught you what to buy, when to enter in the market at the right time. All this did was afford you the ability to make highly accurate decisions about trend, what market to trade, where to enter. Would it be worth the investment? Would it be worth the investment to locate, analyze, and execute setups like this in crude? One turning point in a single market can change your lifestyle. How about this in the 30-year bonds? Predicting a near-term top on Jan 31. Market moved a full 5 points or 5 handles, which is $5,000 a contract. Equity and equity options traders sold TLT, bought TLT put options. You can see why this is worth every penny at $9,600. Scanner alone is sold for $19.97, but today, for the first 25 students for attending the Timing Research Workshop, you can get started today by going to TradeOutLoud.com/best. And I want to recap everything you're getting: Trade Insider Dashboard and Scanner, day and swing trading strategies, top 5 weekly alert picks, 7-day playbook, trade entry checklist, live market analysis every week, and access to your private Telegram room for a one-time payment of 97 cents. This is a 7-day access to our exclusive Trend Insider dashboard. We're limiting this to the first 25 because we like to control the user experience. You will get a personal onboarding call with our customer support team. Type your number in the chat if you want to go ahead and lock in your spot, or you can go to TradeOutLoud.com/best if you want to skip the line. My team and I want to ensure you hit the ground running with Trend Insider, so we can only take 25 slots at this time. And get started today by going to TradeOutLoud.com/best. Here's your complete offer once again. I'm going to pause and turn it back over to David. I want to thank Timing Research team, David and Anka, very much for having me back on. I always enjoy doing these with you guys. I hope everybody has a tremendous summer. Stay safe out there. We've got a lot of opportunity on the horizon. You're going to see that firsthand as you get into the software itself. Guys, we have been positioned. We just got positioned short the S&P on yesterday's close. Yes, that is a fact. And this is the reason why. This is the reason why. We have been looking, waiting, watching, stalking for cycle highs right here. And that's exactly what we got. We're positioned short in the S&P. We're positioned long VIX, and we're getting paid right now. And so you're going to see the power of Trend Insider. You're going to get 2 powerful strategies, and I can't wait to see you on Inside. Thank you once again for having me on. Everybody take care, and we'll see you on the flip side.